Good evening. My name is Olawale Okabola, here to bring you the recap of the S&P E-mini futures contract for today, December 18th, 2018. Let's kick it off looking at the bar charts. Here is the monthly bar chart. We are one time framing down 1, 2, 3 months. We were in a 3 month balance area, but we have since breached the 3 month balance area low. We have a new auction to the downside. The month is still, well, we're in the middle of the month, so we'll see whether or not this new auction, this monthly auction to the downside will hold. But as it stands right now, we have a new auction to the downside. Go to the weekly chart. We are one time framing lower, 1, 2 weeks. So we're one time framing on the monthly, we're one time framing on the weekly, and looking at the daily, we are one time framing lower on the daily. 1, 2, 3, 4 days. However, we are in a 2 day balance area because the market closed back within yesterday being Monday the 17th range. So we're in a 2 day balance area, although the trend is lower. So we have a monthly trend lower, a weekly trend lower, and a daily trend lower to balancing. So all trends point down. Let's take a look at the profile. Let me adjust my interval because the range is pretty big. So let me just shrink the range so that way we can incorporate and just get a feel for what's happening. We have what I call a reverse P formation. In profile theory, a P formation signals short covering. However, we close near the low. So what I call it is a reverse P. A P by structure, but reversed, meaning that we close near the low versus a true short covering P formation will close somewhere back within the value area. Also, something I want to make you aware of, and well, yeah, let me adjust this. Value for today is overlapping to lower. However, the point of control did not migrate lower. The volume for today is 4.1 billion shares per the New York Stock Exchange, which is pretty light. I would say my call from what I've observed over the years for a approximately 50-point range. That's why I adjusted my interval because I want you to see the range. It's about 50 points, and the volume being only 4.1 billion shares. Okay, so what we have just overlapping to lower value, not lower value. We have a point of control that did not migrate lower. However, and we have, yeah, low volume, and however price closed near the low. Okay, so what that signals to me as I'm doing my review is that the market could be getting ahead of itself, meaning that the market daytime inventory, just daytime inventory, is possibly short. Here's the open, high, low, close bars with the 70% value area. Okay, I have a tool where I use a reverse profile. That's the reverse profile using the volume point of control on the left, your traditional profile with time, a TPO point of control on your right. This is a 20% value area. 20% value area. I'm sorry. Yes, 20% value area. 20% value area. I'm just getting mixed up about the point of control. Okay, so what is this telling me? Price closed near the lows. However, majority of the volume has taken place back within the value area and near the open of today. On the right side, this 20% value area is telling me that the market spent more time just below the open, but nevertheless back within the value area. So we have majority of the volume back within the value area. We have majority of the time back within the value area. However, the market closed near the low. Overall value is only overlapping to lower, not lower. So that just supports my suspicion that the market is possibly short, at least on the daytime frame basis. So what does this all mean? It means that there could be a possibility of a correction to the daytime inventory that is short. Again, a possibility. Another thing to pay attention to that adds to the theory is we have a couple of anomalies. Here's an anomaly. Here's an anomaly. The point of control is an anomaly. Here's another anomaly. Here's another one. So we have approximately 1, 2, 3, 4, 5 anomalies. That means that the market was not really selling on its own, according to profile theory, and it's just something to pay attention to as a potential point for the market to revisit. Doesn't mean the market will revisit, but again, if you start to add up all the clues, it begins to paint a story that the market is possibly short in the day time frame. So what happens? If the market, for example, gaps lower, then what I just talked about being the daytime inventory, being short, that comes off the table because a gap signals a new auction. We got a new auction to the downside. Everything up above is negated. If we gap and fill the gap, now the short inventory comes into play. And you just have to monitor for market conviction going higher. If the market opens back within range and finds no acceptance, comes out, comes in, or doesn't even try to attempt to take out the low of today, more than likely the market will probably try to at least attempt to adjust the daytime inventory. In addition, the market balanced majority of the day, then we got a sell-off, then we had a rally. An M period, this is the high before they sold the market off again before the market closed, an N period near the lows. This rally high is something you want to pay attention to going into tomorrow, because if value begins to build above this rally high, these traders that went home short, they're caught and they're going to have to cover. If value begins to build and prices accept it below this rally high, we either can have an attempt to try to take out the low, or it would just show that these prices are being accepted here. These guys who short, they have no incentive to get out of their position because they're not threatened. So it's something you want to pay attention to going into tomorrow. You want to use this rally high as a reference, something to pay attention to. I think I've already said that. So with that said, I guess that's it. You want to pay attention to a rally high and have a understanding of the daytime inventory condition, being it's more than likely short. Doesn't mean we have to correct, but you just want to understand what's going on in the market. And we're also in a 2-day balance area, so we could have the balance rules where you break out of balance and accelerate, break out of balance, get rejected, come back in, or remain in balance. Remaining in balance puts these in period shorts on notice that if they're not getting what they want to see, they will more than likely be quick to exit their trade and begin the short covering process. And they also sold it just a tick above the value area low, so you know it's trading money. So they'll begin to think just like traders would think, short-term traders would think. So with you armed with that information, you should be better prepared on how to position yourself to go with whatever the market is giving you. So with that said, again, my name is Olawale Okabola, and wishing you a good night.